out more with Drew Stevens. He's the Mortgage Man on AM 1160.
Back again, the Mortgage Man. Drew Stevens at Residential Plus Mortgage, 847-227-5533 or 630-915-5706, www.drewthemortgageman.com. You can see my funky caricature on that website too. Here with Cindy Banks over at RE/MAX. And please, if you wish to talk to her or me, please give a call again, 847-227-5533 or 630-915-5706. On a brief, serious note, my friend's wife is very ill. I'd appreciate your prayers for Abby. So if you have a second, please, she's in very dire need of your prayers. This being Christian radio station, I hope I'm reaching out to the right audience. I'm sure I am. So please pray for Abby. I wanted to talk a little bit about financial planning, Cindy, just for a second. We have a sister company called financialfulfillment.com that's run by Jim Crace, my friend, who's usually on every week, but he's out in Egypt someplace, or whatever he is. California, I suppose.
Close.
Same difference. And we kind of go through, I've been describing a couple of his plans, but what's important is, especially those of you out there, it doesn't matter whether you're a senior or not, you want to get away from risk. And I know that at the end of 2008, I lost a ton of money because I had too much money in equities. And if I'd been in Jim's plans, I'd have twice the amount of money I'd have right now. So it's pretty frustrating. You have to learn a lesson to, you think you know what you're doing as far as stock picking or mutual fund picking, whatever it is, and then you find the market goes down by 50%, 55% actually, you really kind of made a mistake. So what I wanted you to do, if you can, just get a piece of paper out and write down $100,000. Now, it's an arbitrary number. It doesn't mean that you're expected to invest X amount. It's just a number that is easy to use the math with. And there's two basic plans. One is a tax-free plan, and one is a bonus plan. And in either case, you've got a basic guarantee rate of return of 8%. Now, that sounds unrealistic. It isn't. It's in writing. And how many stockbrokers do you know can put that in writing? They can guarantee you 8%. So make sure that you write that down, 8%, and circle it. Again, everything you do with any investing, whether it's mutual fund or stockbroking situation out there, they're all going to say past results do not guarantee future returns. Well, that's not the case here. You'll have it in writing. So write down $100,000 if you would. In Jim's bonus program, again, Financial Fulfillments, there you get 10% upfront for any new monies in the first 11 years. So right away, if you're in the market, you start at 100. In this program, in Jim's program at Financial Fulfillment, you start at 110. So write down 110 and 100. So because you've already got $10,000. Let's say in the first year you go up 8%. It's an arbitrary number. Let's say that happens. So in the very first year, in your regular stock market, you've got 108. In Jim's plan, you have 118.8. Now let's pretend what happened now. That what happens now is what happened back in 2008, where you had this huge reduction in rate of return. So the market, let's say, went down 50%. So if you're in your stock market plan, now you have $59,400. In Jim's plan, you have $128,300. So again, to reiterate, no matter what happens, you can't go down. You can't go down. You got this guaranteed percent of rate of return of 8%. So in the second year, you've got 128. In your stock market plan, you've got 59. Now, let's say another year passes, and in the stock market plan, as what happened in 2009, let's say you got 95% increase in the stock market. So let's say your money's went up 95%, but don't forget they went down 55% first. So in your stock market, you went back up to $115,830, $115,830. But in Jim's plan, you can't go up 95%, but you can go up 24%. So you'd be, 22%. You'd be up $154,000. So you have $154,000 in Jim's plan and $116,000 in the stock market. And this is just what would have happened in the indicative period that just occurred. Normally, you won't have the big swings like that. But just imagine, what if you went down just 20%? If you went down just 20% and then you went up again, there'd be actually an even more pronounced difference because Jim's plan can easily go up to 22%. And this is you've got a tax-free one and you've got a qualified bonus plan. So please make sure that you call on this. The numbers are huge and the money is guaranteed. That's guaranteed. So stop taking risks. We'll talk a few more minutes about reverse mortgages again, but I kind of want to mention too is that there are some articles in the paper in the last week or so. Wells Fargo has gotten out of the reverse mortgage market, but trust me, all that's happening is that the ones who are really doing the reverse mortgages are more and more into them. There is no fear of a loss. Of people not wanting to do them anymore. Wells Fargo felt that it wasn't in their best interest to pursue them. It doesn't mean a thing. So Urban Financial, one of the lenders that I use, the president of the company just sent out something to us that says we are very heavily into the market. We have no fears. If you are 62 years of age or older and you're scared, you have equity in your home, but your income is down, you've only got Social Security, you can't feed the dog, you can't eat properly, you can't take your medicine, listen, call up. It's your money. That's your money. And do not think you're going to lose your home. You're not going to lose your home. You stay in the home as long as you want, as long as you want. As long as you want to live in this house, that mortgage will never be due. You'll never make a payment of any sort. Now, if the reverse mortgage, let's say it's about 4.9%, let's say that what happens is that it's being a, quote, reverse mortgage, what happens is the lender is paid back through the equity of the home. But if the equity in the home increases at a rate that is faster than the reverse mortgage, then you don't lose any equity. But if it does, if the reverse mortgage increases at a rate that's faster than the appreciation of the home, and you go upside down, that amount is forgiven. A reverse mortgage is a non-recourse mortgage, so you do not need to pay the difference. So don't worry about some massive amount of money you're going to owe after you die or before you leave. It's just not going to happen. So please allay your fears and call me 630-915-5706 or 847-227-5533. I want to talk a little bit about purchasing and first-time home buyers.
Sure.
Okay. And I like purchases because purchases have to close.
Right.
Okay. They have to close.
Well, the first-timers have a huge advantage into the marketplace, but we're finding that the first-timers are a little bit older than they had been in the past.
Yeah.
So right now,
why is that?
25 to 30-year-olds are coming into the market. We used to see a little bit earlier than that, 23, 24. So I think people are saving money, perhaps at home or, with someone else. They're saving money in order to make that purchase. They're very particular. There's a lot of choice out there.
Yeah.
You can shop and shop.
Yeah.
So the main thing is to align with a realtor to get current information. There's a lot of websites that offer detailed information, but it's not accurate, relevant to price chops or price changes, also just market inventory. So we have access to what's current and new every day, and we can email that to you guys, and you can be up on the market and then drive by the marketplace, understand what you like. And if something seems too good to be true, it probably is. If something's hypothetically a single-family house for $50,000, it's probably in need of massive repair. It's in foreclosure probably, or it's already bank-owned. So you have to expect to be able to do work on these types of properties.
I have a couple of those in process right now. We have to wait for the short sale agreement to go through, actually,
For the short sales, for sure. That takes
taxes
more
are
time.
Higher. Taxes are actually higher than you would think sometimes because, but it's not a material issue. If you have a $125,000 home that used to be $200,000, the tax is going to probably be for a $200,000 home. But still, which
is a really good point, because if you qualify for the $125,000 home through the lender like yourself, you may not qualify for the taxes.
That's why they got to call.
That's why they have to call.
Absolutely. 847-227-5533 or 630-915-5706. I also think it's important, too. I get this sometimes. I don't know if you do, too, but sometimes somebody will say this. They'll say, well, you know what? I see it going down more. So the $100,000 home might be 80 in the fall. Here's what I say. You might be right. Okay, but here's the deal. What are the chances of the rates staying? So these rates could go up like that in a heartbeat.
Yeah.
Last year in the fall, they flew up. Inflation happens anytime. The rates went from 4.25% to 5.25% in less than a week. So if you think you'll get a home for $10,000 less $10,000 less if you wait till the fall, that might be true, but your payments over time will be more than $10,000 more.
Well, and you only win in this type of a market if you participate.
Yeah.
bottom line. So you have to go after the market, get a good value, do your homework and your research, and then you need to perform.
Right. And these are just, it's a perfect storm. You've got the lowest possible prices and the lowest possible rates. For goodness sakes, at least get yourself pre-qualified. Give me a call, 630-915-5706 or 847-227-5533. I can set you up with Cindy, and she can show you some homes.
Sure.
And we can go through the different types of programs that are available. There's as little as 3.5% down in FHA. There's sometimes you can take a home on what they call a 203K loan, which is a construction loan. And if you have a home that you like that might need a little bit of work, you can go out that route also. There's
a ton of options.
Yeah.
In order to play, you have to call.
Absolutely. Also, finally, over at Residential Plus Mortgage, we are recruiting, looking for good people who want to participate, whether it be mortgages or financial planning or anything in the real estate markets. We'd love to have you over. I got a great place over there, 2340 South River Road in Des Plaines. We just moved there. We were at a different building for the past 10 years, but we just moved to this new place, and it's fantastic. So I'd love to have you come and see us. Again, 2340 South River Road in Des Plaines. And
come get a hot dog and fries, Scoobies. See my billboard.
Yeah. Check the. What was it? Wasn't there something else besides the billboard that you were at?
I have mobile cars running around with my Cindy Banks team name all over them.
Mobile. What is that? What does that mean?
Cars, trucks.
Oh, okay. Like billboard, like on sides. That's cool.
Of moving vehicles.
Right. That's awesome. This is cool. It's a great picture of Cindy also, so you can also check that out too, and give her a call. Give me a call. And remember, Cindy at cindybanks.com is her email. CINDY@CINDYBANKS.com, just like it sounds. And this is Drew again from Residential Plus Mortgage. Thanks for coming with me tonight.
Thanks for having me.
Phone number again, 847-227-5533, and you can catch me at www.drewthemortgageman.com, and also my cell phone, which is 630-915-5706. Have a great weekend, everybody. Enjoy your 4th of July.
Happy holidays.